associates here on the research team. Next up, it's a pleasure to welcome our next company, HEXO, which is a Canadian licensed producer that has developed one of the more interesting product portfolios that's targeted towards the adult use cannabis space, while also servicing medical patients. Before I pass it on to the CEO, Sebastian St. Louis, who's joined us today, I'd like to remind the audience that if you have a question, feel free to send it in through the portal, and we'll do our best to get that answered at the end of the presentation. So without further ado, Sebastian, just want to say a big thank you for joining the conference this year, and take it away. Thanks.
Thank you very much, Bill. A pleasure to be here with the Cannacord team. Could I ask you, Bill, real quick to let my CFO in the room? I believe he's online right here, Trent McDonald, trying to come in. And with that, could we skip ahead to slide 3, please? So HEXO was founded about 8 years ago. I'm the founder and CEO, and we have grown from being the 17th company in Canada and legal Canadian cannabis to now being the top 3 on a pro forma basis after our upcoming acquisition of Zenabis. We're top 3 by recreational sales, and that is a pretty monumental achievement. We had set out strategic objectives for ourselves to be a top 2 branded company, and so we're still firmly that still remains our strategic objective. We're on that journey now. We believe that having a top 2 market share is critical for brand building. I fundamentally believe that brand building comes from distribution first and then product feature set second. But both those elements are critical to do so. We're starting to see the emergence of brands in cannabis. We're starting to see consumers shop for HEXO products, not just for any cannabis products. And that is gaining steam as we gain a more meaningful distribution. Some Q2 highlights: we had a record net revenue of $32 million. That was a 94% increase year over year. And that's one of the best performances in the cannabis space in Canada. It's our 7th sequential quarter of adjusted EBITDA improvement. And we've reached positive EBITDA, which was a goal that we had guided almost a year ago. We are the #1 beverage brand in Canada with our partnership with Molson Coors. Next slide, please. The history of HEXO is a busy one, as you can see, so various milestones throughout the years. Throughout the journey, we originally founded around a medical cannabis company, but quickly pivoted to focus on recreational sales, or adult use sales, as we prefer to call them, when that became available as an option. We're publicly listed on the New York Stock Exchange and the TSX. And as I've mentioned, we are now top 3 in Canada retail. We've got one of the best IP portfolios in the space, with the 2nd largest portfolio of intellectual property related to cannabis in Canada. And we have a partnership with Molson Coors for beverages. Skip ahead 2 slides, please. So how to talk about a CPG company if we're not going to talk about the products? So in front of you now is our product innovation. So various HEXO products across various different brands. At the bottom, our Powered by HEXO strategy, a full line of beverages powered by HEXO with our technology, created in partnership in a joint venture with Molson Coors that currently command a 44% share of the beverage market in Canada. We believe that this strategy is an expansion strategy that will allow us to go into the US and worldwide on a capital-light manner, while leveraging the existing distribution and infrastructure at scale that Molson Coors bring to the table. What's been a resounding success since our launch in January of this year has been the consumer adoption of these products. And we attribute that success to really focusing on building a beverage company first and adding the need states to consumers second from cannabis. As you can see on the bottom of this slide, there are various different offerings, and we touch about 85% of consumer occasions. So from our House of Terpenes, which is the product in the middle in that dark blue bottle, to our Molo beer brand, we touch flavor-forward products, low-calorie products. Our beer contains about 30 calories per serving, and we also vary the THC concentration. So if you have a Little Victory, which is a de-alkalized wine offering, you have a 2.5 milligram THC and 2.5 milligram CBD offering with a fast onset with our nano-emulsion technology. And we also have an XMG product, which is that slim can to your left, which is a 10 milligram offering that's targeted to the younger demographic, 20 to 40 gamers. So very wide portfolio offering has been very successful so far. And that's just the beginning of that powered by HEXO strategy, which I'll talk about in a minute. Of course, we have a very robust offering on flower. We are one of the lowest cost producers in the country, if not the lowest cost producer, although that exact data is hard to come by. If you look at our gross margins, we certainly are the best performing company, or one of the best performing companies from a gross margin perspective in Canada rec, holding mid 30% margins while still offering consumers some of the most competitively priced products in the market. Next slide, please. HEXO has put in market very competitively priced products, but we're also quite good at crafting quality cannabis. Our HEXO Plus offering comes with a promise of 20% plus THC, and it's obviously sold at a higher price point. This is a product that's sold in Quebec only, Quebec where HEXO holds a dominant position as the #1 cannabis brand overall in our home market of Quebec. Next slide. One of our large successes has been the launch almost 2 years ago now of our product Original Stash. Original Stash is a brand that we created to address the consumers that were shopping in the black market. And I'm very pleased to see the progress. Anecdotally, black market websites have now largely stopped offering flower in the same pricing category as Original Stash. And so we credit the governments with the rollout, obviously the retailers, the provincial boards, but also HEXO's innovation and Original Stash and being able to displace black market in Canada and contributing to this $3 billion plus run rate that we've built at Canada Retail for recreational adult use. So what's exciting now to see is to start talking about concentrates, where we go with this brand in the future. On the bottom of the slide here, you can see that our hash has held some very high rankings nationally. We are the #1 player in hash in Canada, and this is available across Canada under Original Stash. Next slide, please. Outside of Quebec, we celebrate Canadiana with our Up brand, 20% promise, and a flower that's handcrafted, super high quality. We're very proud of this, and consumers have responded quite well. You can see that we have a number of top SKUs amongst our flowers between Northern Berry, Ghost Train Haze, etc., across the country. And a very nice monthly increase by units sold since launch in November 2020. The Up product is available in a distinct red pouch, and we are continuing to innovate and expand that category in other product classes. Next slide, please. Our most recent innovation has been Bake Sale, which is cannabis for cooking. So with Bake Sale, what we did is we actually lowered the price floor on cannabis again. And I remind everybody that although we do have that ability to lower the price floor, HEXO does maintain those mid 30% margins. So we're actually able to lever our cost advantage in delivering great value to the consumer. So far, reviews around Bake Sale have been pretty phenomenal, and that is being sold in a distinct orange pouch. Next slide, please. I can't really talk enough about our innovation and what we've achieved with Molson Coors in building the #1 beverage brand in Canada, smoke-free alternative with a variety of different effects and tastes. We believe that the beverage market overall will eventually be about 15% of the total category. We believe that the reason it's been a fairly small percent of the total category in the United States, so at about 1%, is that the companies that have provided beverages have fundamentally missed the opportunity to create a great tasting beverage. HEXO has solved that problem with our nano emulsion technology and the various other slew of technologies that we put into this product. And so we've created a great tasting product across a variety of different flavors and have then infused them with a cannabis the cannabinoids that give it a specific need state for consumers. We're continuing to look at this partnership to expand it in two meaningful ways. So the first way is geographically. So our beverage portfolio is now available in CBD formats in Colorado. So HEXO is selling CBD derived from hemp beverages in Colorado. We're selling those as mass channel, so groceries and soon to be C-store, as well as traditional cannabis channels like MSOs. And we expect to expand that partnership geographically, so being able to look at more states very soon. But also we look to expand that, not the specific partnership, but the model of Powered by HEXO with new partners. We are in advanced stage discussions with a number of large consumer packaged goods companies. We expect the next partnerships to be ones around functional foods with CPG companies that for which you probably have the foods in your cupboard or your fridge, and then to expand from there into cosmetics and pet care by leveraging our technology that we've developed in Canada, but that can legally cross the border. Next slide, please. And again to slide 14, please. 2 more slides. So in terms of near-term strategic priorities, that U.S. expansion is quite frankly the highest priority for HEXO. We've recently hired our U.S. GM, Charlie Bowman. Charlie comes with over 30 years experience in manufacturing, cannabis extraction and formulation, has a PhD in so a formulation expert to some extent. And he is now standing up the team and beginning to deploy capital to support our Powered by HEXO technology. So not only in Colorado, but soon in other states. We do want to continue to increase our market share outside of Quebec. So last quarter was very significant because it was the first quarter in HEXO's history where almost half of our revenue, so 49%, was from outside of Quebec. And we did this while maintaining our #1 share in our home province. Of course, market share is meaningless if we don't make money, and so we continue to strive for operational excellence, to continue to install automation, and as evidenced by our best-in-class margins, considering the lowest price sales point, HEXO is performing quite well in continued operational excellence. We are looking forward to certain initiatives like configure to order, just-in-time inventory, to keep driving that margin excellence. Next slide, please. In terms of longer-term priorities, HEXO is really built to become a top 3 global cannabis brand. Before we do that, we need to make sure we become top 2 in Canada, which does not preclude us becoming #1, and to build significant market share in the United States through our Powered by HEXO strategy with global CPG. The product innovation that will get us there is an investment in technology in 2 broad buckets. The first is need states. So what can we get these cannabinoids to do for people? And that involves whether we want to deliver euphoria, whether we want to deliver health outcome, sexual relations, appetite suppression. So we're investing pretty heavily right now in finding out those specific formulations, not just from THC and CBD, but how can we look to other minor cannabinoids to create really bespoke formulations that deliver a specific need state. The second broad bucket of IP and product innovation is around platform technologies. So once you have that need state through your cannabinoids, how do you get it into a product and really create something special like we did with Molson Coors? And this, depending on the product that you're trying to make, this is a different type of technology. So in the case of beverages, a nano emulsion is the core technology in which we have a very fast onset. So we're sub 20 minutes with a very good offset as well, which allows sessionability, so consumption of more than one single beverage. But as we start to move to food, we think about coatings, we think about thermogels, and other technologies that can eventually lead us into cosmetics and pet care. Next slide, please. To achieve all this, of course, we need a fair amount of infrastructure. Our sites are basically split in two main sites with a few satellites. The main cultivation site is a flagship state-of-the-art greenhouse that's been built in Gatineau, Quebec, where we take advantage of low-cost electricity and low-cost water, and where we produce some of the finest cannabis in the world. In fact, some of it is actually sold in Israel and available soon, hopefully, in Europe. And so the second part of that facility is our manufacturing site in Belleville, Ontario, which is one of the largest centers of excellence in the world. This is a pure processing and manufacturing site for cannabis products. This is where we house the 188,000 square foot beverage facility for Molson Coors, Truss, which is the largest and most advanced in the world, providing both a bottling and a canning line. The advantage of having structured our company around a large center of excellence for manufacturing is that as we scale and look to M&A for non-organic growth, we are able to realize significant synergies as we acquire other competitors that don't have that capability, and we bring them under the HEXO home. I will talk in a moment about the Zenabis acquisition, and we plan on realizing significant synergies there by leveraging our Belleville site. Next slide, please. So there's a selection of photos on the right-hand side here. You can see some heavy equipment, heavy automation. You can see that the site is sparkling clean, basically built like a pharmaceutical manufacturer, following good manufacturing practices. And you can see, of course, the scale of that building. Next slide. I'll turn it over to Trent McDonald, our CFO, to talk about our financial position.
Thank you, Seb. Yeah, so look, we've been having a great set of results for several quarters in a row now. You can see in our Q2, we had $26.9 million of adult use net revenue and gross profit of $11.7 million. So that is the 40% margin to which Seb alluded to earlier. Strong margins comparable to the rest of the industry. Net revenue of about $2.57 per gram and a lot of kilograms. So kilograms produced were higher, but they've been used in putting into finished goods and into other products that we will be using producing down the road. We do still have a lot of share capitalization at 122, but we have warrant options, restricted units that fully diluted would be 166 million, and it's come down 4-1 as a result of the reverse split that everyone would have known about back in December. Can you go to the next slide?
Thanks, Trent. I'll take a moment to talk about our management team really quickly. So for my side, finance background, manufacturing background, entrepreneurial background, and funnily enough, after 8, I don't know if they're short or long years, from my perspective, they've been pretty short, but I'm the longest running legal cannabis CEO in the world. And that tells you a lot more about the industry than tells you about me. But I've been very fortunate throughout those 8 years to build what I think is an absolute world-class team. And you'll see some of the resumes here, and I'll turn it to Trent to close off in a moment here and introduce himself. Don Courtney has a phenomenal CPG background, our COO, experience with PepsiCo, Mars, over 30 years doing that. Jay McMillan, our Chief Development Officer, again, decades of experience in selling and building relationships across just about every industry. And Rod Vandercourt, our General Counsel on the SLT, which was named as one of the top 100 GCs in Canada, coming off of a $1 billion build of a company in the vitamin space, and that has been with HEXO now for a few years and instrumental in building our relationships with the CPG companies. Trent, I'll let you introduce yourself.
Oh, thank you. So myself, I have an entrepreneurial background as well, an award-winning entrepreneur in my own right in both fish farming and industrial services and transformer oil and rejuvenation. I've also been involved with some very large companies like Zenabis and have been directly involved in a lot of business development, M&A activity, and growing out some new banners here in Ontario in the discount grocery space. Been very heavily involved in the pharmacy space with a division of Zenabis called Lawton Drug, and more recently with RX Drug Mart, who was named last year the Globe and Mail's fastest growing company in Canada, also with Indigo Books and Music, among others. Very much in tune with retail environments and a bit of a different mindset coming into HEXO. Next slide. So I want to talk a bit about the investment highlights here, because when you think about HEXO and you want to understand it in relative to the industry, you have to look at a few things that we do differently. First of all, as Seb talked about earlier, we're very focused on operational excellence and market leadership in operational excellence, which translates itself into very, very strong economies of scale, which of course, if you look at P&L, is where we get our wonderful margins. So we maintain those 35, 37% margins on Canada Rec, the 40% margins when you blend in things like international wholesale. But one of those things comes from our ability to utilize our capacity in an extremely efficient way, so that the cost per gram is not burdened overly by a whole lot of overhead. And you spread it out evenly throughout that volume. So it's a lot of management and trial and error, which we've been able to perfect over time. The other thing we have to look at is how we've rolled ourselves out. So in Quebec, we maintain a top market position, but as we've gone forward, we're actually now getting to the point where we have more sales outside of Quebec than we do in Quebec, and so that's a success story, and we continue to build on that market by market. Starting with the most important ones being Ontario, Alberta, and British Columbia, and then everything in between. But really what we like to think about ourselves as is beyond being a top two, and then hopefully the very top in Canada in terms of Canadian recreational sales. Our biggest focus going forward is really going to be on the U.S. And expanding down there in a way that Seb described earlier. We believe that's going to be the most accretive for our shareholders and build this long-term sustainable shareholder value. For us, we've also taken a bit of a different position in terms of the sustainability of our balance sheet. And so in this sector, when you look at all the money that's been raised over time, we think of it in terms of what have we done in terms of the capital deployed to date. And so if you look at our balance sheet and how it positions itself in capital deployed to date, if you look at that meaning of assets, net assets less cash, because cash hasn't yet been deployed, and you think about how much money is sitting there on the balance sheet in net assets, and then add to that the funding of the accumulated deficit that would have taken place from the time over time, and you think about how that capital deployed looks and compare that across the sector. What you need to do is take that capital deployed, and there are some of the LPs in our sector that have, are literally into the tens of billions. You have to look at that in terms of what is the capital deployed for the market share you've obtained. We like to look at it as Canada adult use recreational. And so for every 10 basis points of Canada rec market share, we've deployed about $19 million of capital. If you compare that across the sector, that is the best of anybody in the top five. And we're about one-fifth, one-sixth of some of our larger competitors. So we've made really good use of funds, and that's translated into an extremely strong balance sheet where we don't have a high depreciable capital base. We also have a great cash position in terms of operational cash. You've heard Seb and I talk about this before. If you're new to our company, if you're not, then you would have heard us talk about that before. From an operational cash flow perspective, we've only used $8.1 million in cash flow from operations, not counting non-cash working capital items, over the last 3 quarters combined. So, and we've had a good, strong amount of cash on our balance sheet. At last balance sheet date, it was over $120 million. And so the question is, if we were to raise money, which you can see in the market that we are doing so, is it or is it not for strategic purposes? And that's what we've said to the market in past. We would only raise money for strategic purposes, and that is what we're doing. So if you actually read the supplemental for use of funds and the actual press release that goes with it under use of proceeds, you may gain some insights into maybe some of the things we're doing right now. We continue to be lean on CapEx, like I said, our low depreciable capital base, and we continue to invest in R&D. And we actually do have the second highest IP portfolio of any LP in Canada. And we continue to maintain a targeted brand portfolio across many consumer segments. So they were all talked about earlier by Sebastian, but it makes us very differentiated in terms of how we've been able to compete against black market and some of the innovation we brought to play in the market as a result of that, and some of the successes we've had. And of course, we're doing the dynamic partnership. We want to be able to grow in more complex areas such as edibles, botanicals, pet, and of course, beverage, by not being a cannabis company who makes chocolate as an example, or granola, or cookies, or beverage as a cannabis company, but instead partner with world-class CPG partners who actually already do that and have name brands and have a great portfolio known by consumers, trusted by consumers, that want to spread out their portfolio and get into products that have THC or CBD, either through hemp or from cannabis. And so that's what we believe is going to be the growth pattern going forward, and it differentiates us as an investment. Next slide. So I can certainly talk about the HEXO Zenabis Global Partnership. With us, we've decided that this was going to be a great synergistic investment on behalf of our investors. Zenabis is extremely strong. They have been growing in the sector quarter over quarter, if you compare both sequentially and year over year. They have now, in the last financial results, they're between 12.5 and 13 million in adult use, and have been growing significantly. That puts them well into the top 10 now, and growing aggressively. They are also one of the higher margin producers and have a low capital base. And so they have all the things that tick the boxes for us. They also have a world-class indoor facility in Atholville, New Brunswick, which brings a different type of grow to the HEXO family that we don't currently have today, with our site in Masson being a greenhouse facility. This allows us, we believe, to be able to grow more consistent high-end craft type grow, especially in the 20% THC and above. So a lot of synergies there. We also believe that we're going to find $20 million of cost of goods, SG&A, and other types of synergies by combining together. And if you look at their financials more recently, they were slightly adjusted EBITDA positive, just like ourselves. So we see that this is going to be very accretive from a financial results perspective. An international presence. We are in Colorado, as everyone knows, we just talked about with trust, but they actually have an established business in which they're a joint venture partner in Malta, which allows them to sell through products into the European Union, especially through Germany. And it's a licensed producer, or it's a licensed establishment, which allows us to seamlessly sell into that partnership and take advantage of an entirely new market that we don't currently have. We are selling into Israel, but this opens up the European Union should we decide to go down that path. And of course, their supply chain, which I talked about with regards to their Atholville site, which is a world-class site. We've seen lots of indoor sites, but this is one of the best ones we've ever come across. Next page. And I'll pass it back over to Seth.
Thank you very much, Trent. And I think we're just about coming up on time. It's been a pleasure to be here at Cannacord's conference. Bill, do we have any questions from the floor?
Yeah, I'll ask a quick question on my end. I also just want to say thank you guys. That was a great, really detailed presentation. You answered a lot of my questions. But you talked about the Colorado market, where you guys have launched your Very Vel products through the joint venture, and that you're looking at other markets. When I hear that, I think about Colorado. They have a very robust adult use market. Perhaps you could talk a bit about what other markets are you looking at in the United States? I would presume that it would be an adult use market. Any color that you can provide on that is greatly appreciated.
So we're focused on building the adult use brand. So you're right with that clue. We believe there's between 10 and 20 states that have a regulatory framework that allow us to play legally at all levels of U.S. government. We're being very careful with the regulations, because it is critical for us to remain on side with FDA, DEA, municipal, local, all the rules. And we look forward to talking about that in more detail very soon.
Okay. Okay, great. Unfortunately, guys, we've run out of time, but I just want to say a big thank you for joining in, Trent and Sebastian. It's been a pleasure, and I look forward to hosting you guys again in the future. Have a great afternoon.